Welcome to Simplified Profits with over 23 years of experience in the stock market. I'm Anthony Calhoun. Just make sure you subscribe, turn on your notifications, leave some feedback. We're going to take a real quick look at what happened in the stock market today. Also, just touch on a couple positions I exited on my transparent account and what I might actually turn about 10% of that account into. But let's jump in real quick. So, SMH, the semiconductor ETF, was the biggest sell off today. If we take a look, so it dropped 1.3% today, but it was down as much as, let's see here. So this is the hourly chart. Okay, so this is how the day started off. It dropped. So yesterday it would have closed at, let's see here. The close yesterday was roughly right around here, 194.99, right there, and it dropped as low as 2.5%. And then you can see right around 2 o'clock, this started ticking up on the hourly chart and closed down only 1.3%. So it was down as much as 2.5% on the hourly chart. And one thing I want to dig into, so there's a lot of people out there who want to trade options and that do trade options. But people always ask me, how would I trade options when I trade options? Because I've said a few times that I do trade options. I just wouldn't do it. I don't recommend it to people. And I don't try to teach it because it's a very risky play. I mean, you could basically be out your money real quick. But when I do it on an hourly chart. I do it with a very small percentage of my portfolio. And like right now, for instance, I was giving somebody an example. So these gap ups, okay, I maybe would have. So it just kind of depends on where the daily chart is. So when the daily chart's oversold, I would buy like 3 months out on options and hold it till it's overbought. Okay, and you can make actually a really good, really good amount. I mean, you're talking 200-300+%, depending on how they're priced at that time. But lately, the market's been kind of, and just so you kind of can see what I'm waiting for in the market, I don't care what the price action is. I don't care where the price is. I'm looking at the stochastics. Okay. I'm waiting for these oversold territories to start my position. And then if it's like that, for instance, I would average down. That's down 5%. So your leverage ETF would be down 15%. So at that point, I just spoke about this on another video. I don't really want to go over it again. But right in that area, that's why we leave cash. We don't go all the way in, but we would have averaged that down to where we were only down about 5% and then locked in maybe 15% on the swing up. And that's basically what we do. Now, last time we entered SOXL, it was right here. And we could have held, I believe it's up about 40% right now. It was high, up as much as about 60. But it kind of got weak right here. And the market's kind of toppy. It's at highs. So when it got weak right there, we did go ahead and pull the trigger and exit with about 13% gains. Nobody knows what's going to happen next week or the week after. Only thing I know is I will buy when it's oversold and sell when it's overbought. Now, depends on how the strength looks. I may hold a little longer. If that looks stronger on its way up, we'd probably still be in it. Well, we probably would have definitely exited in that area. But anyway, back to what happened today. As you can see, the market sold off at open. Same with all the charts. This is triple Qs. We're back on the hourly chart, and it sold off roughly, a percent, and then ran up, and it closed down 0.2%. SPY actually closed up 0.3%. Dow Jones. Now you can see this hourly chart is looking and setting up a flag. What direction it breaks, who knows? Basically, what it is, in between the high and the low, you got some consolidation, and it's going to break out one way or the other. And we'll look at the daily chart here in a minute. The Dow Jones closed up 0.4%. So now to me, you got the stochastics moving lower. Let me put something else up here real quick, which is another indicator I use kind of rarely, but it's about as good as putting up the 3 and a 5 day moving average on the chart. All right, so this usually if the 3 day, I used to trade like that for a while. If the 3 day crossed over the 5 going down, or if the 3 day crossed up over the 5 going up, would be my buy and my sells. And this, your Gotic indicator, which you can't, it's not on every brokerage. It's kind of a hard indicator to find on some of your platforms. I usually set it up with the same kind of green and red, just so you know, basically, depending on what's on top of each other. So right now, this crossed down, and there's other short-term moving indicators as far as candlesticks. So this is the Japanese candlestick, Heiken Ashi. So this right here is setting up. You can tell the short-term moving averages are starting to change direction. Okay. And that is kind of what I look at as far as turnarounds in the market. Basically, short-term moving average as far as the 3 and the 5 goes. Okay. I want to know quick. I don't want late indicators. So I found over time that the 3 and the 5 kind of really align with this candlestick and this indicator. Okay. So that is kind of what I look for. Now anymore, one thing I do is I mainly just use the stochastics and manage my position. So as you can see, I'm looking for oversold positions. Now this wasn't oversold, but it was the bottom of the Bollinger Band. All right, that's Bollinger Band. I know people that started trading in the 80s, and that's all they use is the Bollinger Band. They're really good traders as well. Taught me a few things. Now that took 3 months before it hit oversold again. Okay, SPY. The last one was 2.5 months. 2.3. But if you look, for the most part, they're about a month or a little longer. SMH sometimes 1.3 months, 1.3 months, and 30 days. And right now we're at 1.2 months. So I'm waiting. I don't care what the price action is. I'm waiting for the market to be oversold because that's what I'm confident to go into a leveraged ETF and make a swing trade, sleep well at night, and I don't go all the way in because I keep cash to manage. Let's say it does hit oversold, but it keeps dropping, which there's plenty of times that happens. No, I'm not counting under the 200-day moving average because if it was under the 200-day moving average, I don't mess with it. And when that does happen, you have to scale and manage your position and keep your cost average low. So when it does go up, bam, you lock in profit and you move on. As far as positions go, so I exited my a couple positions that were really ready to swing up. I just don't like the volume in them. Nuclear energy ETF. Keep in mind, I got BWXT as far as I'm concerned, the best company in that sector, and some of my long-term portfolios. But I put that in my short-term or my transparent account. I went ahead and got rid of it. I was up about 3%. And we'll do a complete video on the transparent account this weekend, as we'll have income hitting it this Friday. And hopefully the market's pulled back and we can actually buy something. And then I got rid of DRS, which I really like this company for a long term. If you're looking into the defense sector and aerospace, I mean, check them out. Go to their website. Their earnings, I wish was a little stronger, but they are positive cash flow. They're not burning through money. I mean, they're burning through money, but they're not like losing money every month. But I mean, that thing can hit another 10%. In the next couple of weeks. Actually has earnings at the end of the month, so either prior to that or during. But I mean, this is the company who's real big into quantum lasers. It's right now doing a ton of military contracts and working with Northrop Group, and they're making lasers that basically shooting drones out of the sky and all types of other crap. Really like the company. I think it's almost like a sleeper company, which is why the volume's so low. Which the volume is why I decided to get out of that. Still like the company, still like the stock chart. I just hate being in anything that trades under 200,000 shares a day, especially a $20 stock. So that's where we are as far as positions. That's what happened in the market today. Everything kind of pulled back a little bit besides SPY and DIA. But as you can see, the tops look like they're forming. Could be 100% wrong. Let's go to post hours. Right now, I think everything is down post market, after hours. Yeah, looks like it. And right now I am waiting for a pullback. But man, it's been a strong market. It's been crazy. And a lot of people don't think the economy actually lines up with the stock market, which it kind of never does. You could have a company raking in a ton of profit when the economy, when people's broke, when people's working 2, 3 jobs just to make a living. And the stock market don't always align with what you see out there. But that is it, ladies and gentlemen. Hope you're having a great day, making some money. Hope you continue to have a great week. And I'm out.